Warren Buffett has historically not been a big investor in tech companies, but in recent years he has started to invest in a few, and one of these companies is HP Inc., ticker symbol HPQ. So in this video, I'll be diving into HP's business and analyzing their recent results, and towards the end of the video, I'll discuss what I think the fair value of the company is, and we'll talk about some interesting developments recently as well. HP basically has two sides to their business. The first is personal systems, and then the second is printing. So personal systems includes all their different computer offerings, which includes notebooks, desktops, and workstations primarily. They also have some other devices in this segment, which includes the products and services from Poly, which is a recent acquisition that we'll talk about in a little bit. And then in general, the personal systems segment generates about 2/3 of HP's revenue. And within that segment, about 1/4 of the revenue comes from everyday consumers like you and me. And then the remaining 3/4 of that revenue comes from commercial customers. Within the printing segment, they sell a wide variety of office and home printers, as well as some larger scale commercial and industrial printers for various graphics. This segment also includes the newer 3D printing and digital manufacturing business, which will hopefully be a part of the business that will grow a lot more quickly in the next few years. And within this segment, they also sell a lot of printing supplies, such as ink cartridges and graphics supplies. In terms of operating results, we're first going to take a look at the 2022 fiscal year results, and then we'll look at the Q2 2023 results, which were just announced about a week or two ago. So HP's 2022 fiscal year runs from November 1st to October 31st. So the 2022 fiscal year ended October 31st, 2022. So for that year, the revenue was down a little under 1% from 2021 to $62.9 billion. And looking down to the net income line, that was $3.2 billion, which is technically over a 50% drop from 2021. But in 2021, they had a big payout of about $4 billion from some litigation that was ongoing with Oracle. So the higher results in 2021 were definitely an anomaly and not really something that can be taken too seriously, I guess, in terms of net income. The most significant results in 2022, I think, is that we saw the beginning of the softening of demand in the PC and printing markets, and as a result, HP's revenue was pretty much just stagnant. The other significant event was the acquisition of Poly, which is a company that designs and sells headsets and various video and audio conferencing solutions. So overall, I like the acquisition because I think it's a good business to be in, but HP did take on about $4 billion of debt in order to complete that acquisition, which I don't exactly like to see. I think that puts their debt a little bit higher than I would want, which we'll touch on as well later on. Now, taking a look at HP's Q2 2023 results, that quarter ended April 30th, 2023, and for that quarter, revenues were down about 22% to $12.9 billion compared to Q2 of 2022, and this big drop was mostly just caused by the macro environment and a softness in the PC market, especially in the PC market. That was definitely the bigger factor that affected those results. And as we recall, the PC business is the majority of HP's business as well. EPS for the quarter was actually $1.07, which was higher than Q2 of 2022, but a bit over 40% of those earnings were due to some one-time tax benefits that are definitely not going to repeat in the future. So if we look at earnings before taxes, that might be a better comparison, and those were down about 50% actually compared to Q2 of 2022. So definitely not the best look there. One good thing that we saw, I think, is that cash flow is looking a bit better compared to the end of fiscal 2022, which unfortunately isn't shown in this comparison, but this cash flow statement is showing numbers for the first half of 2023 and 2022 respectively. What I generally do like here, though, is that they are paying down some of that debt from the Poly acquisition, and like I said, I think the debt does need some work. Additionally, because of the higher debt load and more difficult macro environment, they have pretty much stopped their share repurchases at this point. In the first quarter of 2023, they repurchased about $100 million worth of shares, and then in the second quarter, they didn't make any repurchases at all. But they did say on the earnings call that they do expect most likely to start back up some share repurchases in Q4 of 2023, but that's definitely not guaranteed. To get an idea of their financial health, let's take a look at the balance sheet. As we can see, as of now, current assets are sitting at $17 billion, which is down a little bit of a significant amount from the end of fiscal 2022. And looking at current liabilities, these are down as well, but unfortunately, they are about 42% higher than current assets, which is just another way of saying that the current ratio is less than 1, which in general, a current ratio of less than 1 is not a good sign for the balance sheet at all. Looking down to the debt as well, we can see that long-term debt is about $10.4 billion, which is a little bit higher than I would like to see. A general guideline that I use is to compare debt to twice the company's annual earnings. So in this case, HP's earnings are in the range of about $3.2 billion. So twice that would be $6.4 billion. And total debt is, a little bit above $6.4 billion. So that means that the debt is higher than we would like to see. Like we saw before, they are paying down some of that debt and have paused the share repurchase program for now. But like I said, they probably are going to start repurchasing more shares towards the end of 2023. And me personally, I kind of think they should just, keep that pause for a little bit longer and keep working on the debt. But we'll just have to see what happens there. And finally, on the balance sheet, we can see that shareholders' equity is negative for HP, which generally isn't a good thing. But in this case, I don't really think it's a big deal. Part of the reason for the negative shareholders' equity, from my understanding, is the separation a few years back from HP Enterprise. So like I said, I'm really not that worried about it. And moving on to the dividends now, we can see that HP is currently yielding about 3.6% with a really awesome payout ratio just below 30%. And they do have 13 consecutive years of dividend increases and have grown the dividend now at an average rate of about 13.5% over the past 5 years, which I really like to see. These dividend metrics overall are pretty awesome, but for some reason, I'm more interested in HP from a kind of value investment standpoint, and the dividend growth just looks like a nice bonus on top to me. And moving now to valuation, we'll first take a look at the PE ratio. As we can see here, HP has historically traded at a fairly low PE ratio, especially for a tech company, with their average being around 7 over the last 12 years. Right now, the trailing 12 months PE ratio is almost 19, but the last months, like we've seen, have been particularly rough for HP. So it would also make sense, I think, to take a look at the forward PE as well. And right now their forward PE is right around 10 or 11. So I think from that perspective, they look a little bit overvalued, but not by that much. And we can also compare them to their peers. And when we do that, it looks like HP is actually fairly cheap on the contrary. So the tech sector average PE right now is 25, while the hardware sector or hardware industry has an average PE of around 24. So like I said, HP definitely looks cheap when we make that comparison. So I also performed a discounted cash flow calculation in order to calculate a fair value. And when we do this, I think HP looks a bit more attractive as well. When I performed this DCF, I did assume revenue growth of 0% after the next 2 years, and I used net margins of 5%, which is really in line with historical levels. And using these assumptions, my free cash flow estimate for 2023 is about $3 billion, which is right in line with management's guidance and expectations. So I think that's a good sign that the DCF so far is fairly accurate. So thus, the calculated fair value for HPQ stock was $51 from the DCF. And when we apply a 10% margin of safety, I get a buy price of $46. So this does look pretty attractive when we compare it to the current price of around $30. I also did a second calculation, and in this calculation, I changed the required return from 7.5 to 10%. And I did this because I wanted to be a little bit more picky and conservative, I guess, but also I think it's more realistic in the current macro environment with higher interest rates. We want to make sure we're getting a little bit of a higher return from our investments to, balance out the kind of risk-free rate that we could get from something like a government treasury bill. So that's why I increased that to around 10%. So when I did that, the fair value looks to be $32 with a buy price of around 28. So I think in both cases, we get higher numbers in one case for sure, but it does show that the current stock price is generally in line around the range of HP's fair value right now, or maybe even below the fair value. On the surface, HP doesn't really look like a very interesting company. They're definitely a tech company that kind of flies below the radar of a lot of investors. And right now, their revenue is generally stagnant and they have a bit more debt than I would like to see. due to the recent Poly acquisition, but they do have some opportunities in the smaller areas of their business for rapid growth, and they do look to be, generally undervalued by a little bit maybe, or within the range of fair value at least right now. Another thing that I didn't mention is their share repurchase history. So over the last 13 years, they have been massively reducing shares outstanding from well over 2 billion shares outstanding in around 2010 to now just below $1 billion in 2023. So this certainly did help shareholders during that time period. But the past share repurchases doesn't really help you if you want to be a shareholder now. It just helps you if they repurchase shares in the future. I would like to see HP, like I said, continue that pause on share repurchases a little bit longer than just Q4 2023. I would like them just to kind of pay down more debt and be a bit more measured and slow with the share repurchases until they do pay down more debt, but we'll just have to see what happens there. Another interesting thing about HP, like I mentioned at the beginning of the video, is that HP is actually one of the few tech stocks that Berkshire Hathaway owns in its investment portfolio. Most people like to say that Warren Buffett owns HP stock, which is sort of true, but there's really no guarantee that Buffett is the one that bought Berkshire stock. So if we look at the numbers right now, Berkshire owns about $3.5 billion worth of HP stock. So that's certainly a positive sign for the company, I think. But if we look into that a little bit more, there's two other investment managers at Berkshire, which are Ted Weschler and Todd Combs, and together they manage about a combined $30 billion in assets. So I think it's definitely possible that this HPQ position could be one of theirs. I think it would definitely be a bit of a larger position for them, but it could definitely be one of theirs. Like I said, it's more exciting for people to say that, Warren Buffett owns and bought HP, but like I said, there's really no guarantee that that's the case, and I couldn't really find, any commentary from, Buffett or Berkshire about HP specifically, so it's kind of just up to speculation. But in any case, looking at when they bought the stock, someone at Berkshire bought about $104 million of HP stock in Q1 of 2022, so a little bit more than a year ago, about a year and a half ago. And then they bought an additional 16 million shares in Q1 of 2023, so just a few months ago. So this means that right now Berkshire owns, like I said, about $3.5 billion of HP, which is about 12% of the company, which is pretty cool to see. So I'll definitely be watching Berkshire's 13F filings over the next few quarters to see if anything else happens with their HPQ position. There's one other part of HP's business that I want to touch on briefly. It is a bit speculative at this point, but that is the role of AI in their business and the impact that could have on HP. So management did talk a little bit about that on the recent earnings call. So I think from one perspective, it could definitely help in terms of just efficiencies within the company, in terms of internal tools and stuff like that. But management is also saying that they see some hardware that is capable of running AI applications being a part of future PCs that the company offers, which would really allow users to run AI applications locally rather than in the cloud. And ultimately, what that would mean is it could potentially mitigate a big security risk. So right now, a lot of AI applications run in the cloud where they have lots of computing power. But what that means is that your data, if you have internal private data that you want to use in some sort of AI application, that has to go on the cloud. And oftentimes some of these AI applications at this point are open source, so they're definitely not very secure. So that could potentially be something for the business in the future that really propels them forward. Who knows? Management did talk about it on the recent earnings call, and I think highlighted it in some of the recent reports. And I really like the way they talked about it. They weren't just trying to hype up HP and use AI as a way to do that. I think they were being very measured in their language and trying to be specific in the ways they think it would benefit them. So like I said, I think it's interesting. I think it has potential. And I like that management isn't just trying to push as much hype as possible, but it sounds like they're actually putting some thought into it and being specific about what it could mean for the company. So right now, I don't own any HPQ stock in any of my individual stock portfolios. And to be honest, I don't really need another tech company in the portfolio, but I also don't want to be restrictive if I see a good company and don't want to buy it just because it's a tech company. I think that's kind of ridiculous. For me personally, I think if we saw the stock price drop a few dollars for whatever reason to probably closer to $25, I think I might be, more interested. I think that would be a pretty good opportunity that I probably wouldn't want to pass up on. In the meantime, though, I'll definitely be keeping my eye on the stock and keeping up with any news that does come out of the business. And I would love to hear your thoughts on the stock and its valuation down in the comments below. And don't forget to subscribe to the channel if you haven't already, so you don't miss out on future videos. And I'll see you all in the next one.